Well, hello everyone, and welcome to our webinar today titled The Future of Fintech Innovation, Roadmap for the New Normal. Of course, we've seen COVID-19 affect all of our lives in a major way, the way we work, learn, sell, collaborate, and especially how people and businesses interact with their bank. It's been amazing to see the innovation that's come out of the fintech space during this time as a reaction to COVID-19. And one of the silver linings that we've seen is that many of the incumbent financial institutions have been able to integrate new technologies and prop up digital initiatives faster than ever before. For example, the collaboration we saw between banks and fintechs executing on the PPP initiative. Today, we're here to talk about what we've seen in the past 7-8 months and what we think will continue to happen in our ever-changing industry. We are blessed with an amazing panel of fintech experts that I will ask to introduce themselves in a moment. I'd say the beauty of this panel is that we have a very diverse group and unique perspectives participating today. We have two bankers, both with very different roles and focus areas at their respective organizations, one investor and a startup founder. The structure of the webinar will be extremely conversational, just going to pose a number of questions to the panel covering topics such as customer experience and digital transformation, challenger and neobanks and banking as a service, fintech partnerships, mentorship and entrepreneurship, and company culture. If we have time in the end, we'll get to Q&A from the audience, so feel free to add questions in the chat. And I will try to get everyone's questions answered either on the call or afterwards. We can help to connect the dots. Everything will be posted to YouTube afterwards. I'm Jacob Bauer. I'm going to be your moderator today. I'm with the Venture Center. We are a corporate innovation platform for banks and fintechs. We actually run 2 accelerators a year. And so why don't we kick things off with Sajil. Would you like to introduce yourself?
Yeah, sure. I just want to make sure I'm not on mute. Yeah. Thanks, Jacob. Thanks for hosting the panel and moderating the panel. I'm Sajil Koroth. I'm the founder and CEO of KapitalWise. KapitalWise was started in 2017. My personal background, I have a product and engineering background. Before starting KapitalWise, I led product and technology for another startup in New York City, which was exited to Northwest Mutual. And even before that, I led engineering for a publicly traded company, scaled that team from almost 5 people to 85 people. And just to add, my background is mostly on the engineering side, but at KapitalWise, I do lead sales and other aspect of the startups. With that, I'll pass it over to the next one in this slide.
Yeah, Patrick, why don't you go ahead and introduce yourself?
Sure, Patrick Sells. I'm the Chief Innovation Officer at Quantic Bank. Quantic is headquartered in New York City, and we've recently made the transformation from a community bank into a digital bank, and we lend in all 50 states as a CDFI focused on our mission of helping serve low-income individuals.
Thanks, Patrick. Chris?
Yep. Hi, I'm Chris Stanley. I'm located here in Atlanta. My background has been technology banking about 15 years, Silicon Valley Bank for several of those years, and then went to the company side for about 6 years, working with growth stage, early stage companies, including early stage fintech companies, wearing a variety of hats in those roles. And then most recently, I've joined Atlanta Capital Bank 3 years ago now to leverage the payments line of business that we have and more specifically focus on fintechs and fintech partnerships.
And last but not least, Jennifer.
Jennifer, with Edison Partners. We are a growth equity firm where at the firm level, we actively invest across fintech, healthcare IT, as well as enterprise software broadly. Fintech is a really key area for us across all the different subverticals, and we've been consistently investing in that over the last couple of decades through all the different iterations of the different subverticals within the broader financial services, but fundamentally we're tech investors, right? And so if you look at our active portfolio companies, we've got companies ranging from Moneyline on the challenger bank side, all the way to companies like Yield Street on the wealth management, and various different areas within B2B, B2C, payments, and you name it, right, across the board, including lending and a few others. So that's what we do. I 100% focus on all fintech investments and portfolio companies, leading deals and investments in that, working closely with our portfolio companies across the board to get to the next stage of their growth. So that's what we do.
Wonderful. Thanks for all the introductions, guys. We'll get right into it. One thing that I really want to cover is customer experience. Obviously, this has been affected greatly by COVID-19. I wanted to hear from a couple of you guys, how has COVID-19 caused the retail banking customer experience to change? And what are banks doing to react to that? Patrick, I'll throw the question to you first.
Sure. Obviously, Jacob, I think it's changed dramatically in particular, depending on what part of the country you're in. New York City was hit hard and fast. And while we are a digital bank, we still have a lot of customers in New York. But I think it's presented an opportunity to really get to know and interact with their customers differently. I think they're much more willing to use technology to interface with us or communicate, and also giving us new ways of kind of trying to figure out how do we deliver that, customer service and that care and attention we want to when they can't come in or you don't see them. And so, for example, some of our customer service agents have started sending cupcakes out randomly to customers that come on board as a means by, just trying to maintain that positivity. And we probably never would have done that had, COVID not happened and kind of forced us to reframe or rethink about what that experience looks like.
Thanks, Patrick. Jennifer, I guess I'll throw it to you, obviously, because as an investor, you're seeing a lot of companies kind of come out of the woodwork with opportunities to collaborate with banks in propping up their customer experience and digital services. What are you seeing?
Yeah, and I think it's obviously been a really interesting year across the board. And one of the things that we've been consistently, and we as, both investor community as well as just fintech, overall, the acceleration of digitization did indeed fuel a lot of these different, whether it be incumbent banks all the way to different fintechs addressing different areas. There's been certainly a pickup of that, but none of these trends are necessarily new, right? It may have accelerated what you already were thinking about, right, a couple years ago or wherever it is, coming to really fruition this year. And frankly, a lot of companies, especially companies that I spend my time with on the fintech side, they really benefited a lot from that in terms of strong tailwinds into their business. And yes, there has been headwinds in various different areas, but it's not even a question if you think about payments, for example, that they skyrocketed this year as a segment, right? Digital banking, yes. Customer experience, absolutely. These are some of the things that you already were thinking about that became even more important in this. We all live in our screens right now. I mean, I don't think I've left staring at my face for the last few months. And it feels like I'm living in the computer and whatever else we got going on. And the experience that you are supposed to provide to your customers doesn't really matter that much if it's B2B solution all the way to B2C, direct to consumer, right? Because that is something that you are going to focus more on. And we've certainly seen that just across the whole industry.
Thanks for that, Jennifer. No, that's I think we all can agree that it'd be nice to step away from the computer a bit more, but
I'm sick of seeing my computer face through the computer screen, right?
Well, as soon as the webinar is over, we'll be able to give you some time away. I think one word that we've kind of all become obsessed with in this industry is the word frictionless. When we talk about creating customer experiences in any function at the bank, whether it's for our business customers or retail customers, what are some of the technologies or even companies that you're seeing that are doing a really great job at making things more frictionless? If anybody wants to jump in here, Chris, maybe we can hear from you on this one.
Yeah, and I would say, I think the first question and this one kind of play into each other. And, as Jennifer said, it's significantly accelerated. People are more financially conscious now. They have time, they're at home. Decision makers are more available. They're not on planes and in Starbucks. They're at home and can be reached more quickly. And so you just see this adoption happening very rapidly. And you've got, it depends on which end of the spectrum you're on, but you think about credit unions, they're very behind. I was with a relative the other day in person trying to get her some money, and we each had opposite, Venmo and Cash App. So we tried her credit union, and there's no Zelle, And I even pulled out my checkbook and I said, let me just write you a check and you can deposit it. Well, they don't have remote deposit capture. So, or that ability. And so I think on that end, they're going to be scrambling to increase, their capabilities. And then, even the smaller community banks, we all take it for granted, but I was speaking with one recently, and they were very proud of the fact that all their employees now had laptops. And so, in our world, we tend to think in a through a certain, or see through a certain lens, but there is a lot of folks out there who are just playing catch up, things they should have done years ago. And, on the frictionless side, I mean, we all know consumer account opening, automated account opening, that's almost the price of admission now. And a lot of banks have adopted those technologies. We are a commercially focused bank. We had a retail line of business for several years, but we didn't have the scale or expertise. And, we decided to divest and put all of our time and resources into, commercial lines of business. And that's, an automated business account opening is still something that hasn't completely been solved. It's, I've been talking to various, authentication KYC companies now. We all know many of their names. I've probably spoken with a dozen or 24 over the last couple of years. Whenever you say, how's your KYB capabilities? They all say, oh, that's a great question. We're working on it. And I spoke to one just last week, and they gave me the same answer as they did 2 years ago. So that, is an area where improvement certainly, there's certainly a lot of room for improvement. And then I think, on the frictionless as well, just, being experts at what you do, you can more quickly handle questions or problems or onboarding, whatever it may be. We started this line of business, certain folks in the bank didn't fully understand it. So bringing on a new client might take, more calls than I would prefer. But now we've got that process streamlined, and usually with one phone call, we can quickly figure out if there's an opportunity to work together. So I think all of those things have been playing into, this kind of frictionless component.
Sure. And if anyone is on the call who is a founder of an automated business account opening tool, please give Chris a call. Patrick, feel free to jump in.
I was going to say off of that, to Chris's point, I think one of the ways where we've seen frictionless, if you will, really get a lot better is in the consumer account opening. There's a company called Mantle, for example, that really pioneered the non-documentation method and brought that down to 3 minutes and 23 clicks. And actually Mantle, we're getting ready to go live with Mantle in a couple months for online business account opening. And so just what they've done on the consumer side, they've done that on the business account opening side. I also think we've seen in terms of the frictionless movement, a company like ClickSwitch that makes it so easy for you once you've switched banks to bring your direct deposit over and other bills. Or I think of even from kind of a company standpoint or customer relations, like there's a really cool social media company called Sprinkler that helps you bring in all this information about what's going on with your customers and what are they talking about. And again, that helps us, I think, as companies deliver a frictionless experience from a customer experience standpoint. So there's just a couple of tools, and Chris, you should check out Mantle for online business opening.
I will. Thank you. I've heard the name a handful of times recently.
Love that. Yeah. And Chris, this is something that you brought up a bit, but how does customer experience differ between large versus small institutions? So Jill, I know you've worked with large and small institutions. Maybe you want to answer this one, and then we can pass it along to one of our bankers.
Yeah, on the service side, we sell mostly to the large enterprises. So for most of our clients are large international tier 1 banks. And the way what we have noticed is that they're also, even though compared to small mid-size community banks, they were much ahead of the, ahead in the digitization path. But even then, COVID has provided, them with insights on where they're lacking, So they're definitely looking for more and more tools when it comes to digitization. And even when we talk to the mid-market, mid-sized banks, they're all looking for solutions that would help them to improve their, consumer engagement and digitization.
Awesome. Does anyone else want to speak to that? All right, on to the next one. One thing that you really can't ignore when you think about fintech nowadays is challenger banks and the banking as a service model. Chris, I know this is something that you handle on a daily basis in your role. As the U.S. market gets flooded with challenger banks and neobanks, how do you think consumers will react, especially how COVID-19 has affected things, and how will the incumbent institutions react?
Yeah, it's a good question, and it's evolving. But when I think of so those terms get used interchangeably, I think. But neobank, I think most often is like a Chime, that's got kind of a consumer or some sort of niche focused banking product that does the basics, debit cards, some transfers, etc. But they must have a bank behind them, a bank sponsor.
Mm-hmm.
And then the challenger banks, it's probably something more akin to Patrick and where they're going, which is, being, digitally native and, trying to provide that full kind of automated digital experience. And so, those are two different things. Being a bank isn't easy. I mean, I know there's a lot of talk of, the OCC banking charter, SoFi bought Galileo. Lending Club bought Radius Bank not long ago, but you remember, Square was looking. I think they were the first to apply for the banking charter, and I think they got into it and said, "Wait a minute, being a bank's not that easy, and I don't know if we want to, have to worry about all that you do as a bank in terms of compliance." And so I think having a bank behind you and using, banks are very good at compliance. They understand it very well, regulations, state and federal. So let's leverage that strength and let the tech companies do what they do, which is build great products, increase customer acquisition, customer service, et cetera. And so I think that makes for, a great partnership. And, a lot of the companies I'm speaking with, they've got various, verticals or niche focuses. You've got folks out there like Greenlight that focus on debit card for kids. You've got companies that are focused on, remittances home for the, the company I'm speaking with now is focused on legal immigrants and helping them pay their bills for their relatives back home directly rather than sending money to them. You've got banks like Lilly that are almost for micro businesses that you might see on Etsy or something. And so you've got kind of these niche focused neobanks that have got great market opportunity, and they can build a wonderful customer experience, but they still need a bank behind them to handle, kind of the behind the scenes and sometimes boring stuff.
Yeah, it's funny to see banks actually as the service providers in some cases nowadays. It's the roles are changing. Jennifer, I know you've made some investments in a lot of these B2C focused challengers and neobanks. What do you think about this?
No, I actually do not disagree with Chris at all. I think, there has been so much conversations about fintech charter all the way to you name it, right? And we've gone through iterations both with regulators and the fintech community as a whole and incumbent banks, right? And I think where things are shaking out, there's two different things that Chris was identifying. One are these niche players, because even if you think about the challenger bank market as a whole and what, people see as headlines like the big players, right? Like Chime all the way to whatever it may be. There was a movement, I want to say at this point, I have no concept of time in 2020, but, about 8 years ago, I want to say, when people were unbundling on different products within a banking, whole bank service, whole bank tech, whatever you want to call it, and unbundling different areas and really innovating and making things better on their own. And then we got into the whole rebundling phase, I want to say a few years ago, where these bigger challenger banks that are established right now have gone through that, right? But then at the end of the day, there are areas of improvement, like you were identifying, Greenlight obviously, recently raised a round, and few others who do focus more on that. I personally don't consider that yet as a challenger bank category, right? Because I think challenger bank now is more about those rebundled offerings, different products in that same area. But fundamentally, you do realize, and you have realized over the last few years, that you do need to partner, right? Doesn't matter if you're incumbent or these, newer challenger banks, where it's not the easiest thing. And yes, after a certain scale, you might want to try to do everything, but one, market's large enough to handle multiple winners. That's one. Even just within US, we're not even talking global yet, even just within US, there are still pockets of underserved areas where you absolutely should be addressing and can address, and there's so much more to do. Market's massive enough to handle multiple winners, and these partnerships that, you know, banks and the challenger banks and all the other fintech innovators have been doing have proved beneficial for everyone, right? So, you know, 100% agree with what you are saying earlier.
Thanks for that, Jennifer. We have a question from Ravi Chandran, which is, what is the role of the OCC in working with technology and innovation? And so maybe we can talk about that from, you know, just the bank's perspective, but then also how these banks and fintechs are partnering. Patrick, do you want to take that one?
Yeah, happy to. You know, it's something we spend a lot of time working on as an OCC regulated bank. You know, I think there's kind of a misnomer that the regulators don't want to see innovation or change. I don't think that's actually true. Every time I've ever talked to them, it's been very open and really honestly exciting. I think obviously you have to understand that as a regulated entity, that compliance exists for a reason. It's for the stability of the financial system and you know, the health of consumers and businesses, but innovation and compliance should be symbiotic. And then I think if you approach it with that mindset, we find that the regulators are a great partner. That said, I think the industry at large, including the regulators, are sometimes too slow at moving. And we do need to probably think about how we do that differently. But I don't think that's just on the OCC. I think that takes both of us together to work through it. You know, the last thing I'd say is the OCC does, or they were at least pre-COVID, they had their Office of Innovation, where it was time you could come talk with them. And I think that's a great time for banks in particular to go talk to them and learn about what is happening with other banks around the country.
Yeah, I would agree. I would agree with that. You know, I mean, just think about it practically. If you've spent your whole career sorting through documents and loans and making sure every I is dotted and T is crossed, oh, but wait, now you can work with cool, innovative companies. I think you're just going to naturally kind of gravitate towards that. And we found, exactly as Patrick said, they're certainly interested and they're learning as well. And it can be a little bit localized depending on region and who your particular regulators are. But they're learning as well, and they want to see that, you know, you're following your same risk processes as always. But they've generally been very supportive.
Awesome. And Sujil, as a founder, I mean, how have you gotten some face time with these regulators, and how has that affected the way you build product and approach these conversations with banks?
Yeah, I mean, we are definitely one of the startup who deals with a lot of personal data. So on the personal data side, we have been scrutinized many times by regulators, how we are using the data, and other regulations like GDPR or any of these regulations, which is very specific to a region or a country. When we are providing our solution to that specific region, we need to work with those regulators. And even within the United States, we have been we have to work through all these regulations, and it's very challenging when it comes to a startup. We need to make sure we understand those regulations and get all these things. And especially when we are working on systems like KapitalWise, which deals with a lot of personal data.
Gotcha. Awesome. And have you been a part of any programs that have been able to kind of enable you to get FaceTime with some of these regulators?
We have been part of the ICBA Think Tech program, which ICBA is a big voice in the regulation. When it comes to banks regulations, and we have been part of certain panels and certain conferences where where people talk about the regulations. But from KapitalWise as a founder, I never had to actually deal with any of these regulations as a founder. But we have been part of that group who is advocating for regulatory changes and helping fintechs and startups to actually deal with these regulations.
Awesome. Thanks for that. And that does bring up data. How is the ability to use AI and machine learning transforming the way banks are marketing to new customers as well as serving those customers? What are some of the things you're seeing? Jennifer, I'll throw the question to you.
I mean, it's just one of those, I would love to get, for example, Sajil's input on this, since he does, do this for his company, among others. it's AI and machine learning has just been one of those buzzwords that's been thrown around a lot, I think. But there are really interesting companies doing really cool things, really. I don't think it's necessarily, I'm a little hesitant about this question only because while I firmly believe in innovation and continual evolutions of these technologies, especially aided by AI and machine learning, transformation sounds a little bit too, it just feels a little bit of bigger word, right? All of a sudden something's changing drastically, and I don't think frankly any innovations like that. It is incremental, it is improvement
Sure.
upon what you've got, and something that a lot of various people have been working on for the last however many years, depending on the technology especially, right, to be able to transform. I don't think we're quite there yet in terms of the renaissance of all the AI and machine learning. That's one. I think it's coming for sure, but I think it's gradually taking hold. This year, I do think certainly expanded people's ideas and understanding of how to adopt these much quicker in terms of acceleration point.
Mhm.
Just, and this is just my personal opinion, right? Just haven't seen the renaissance yet, if that makes sense.
Understood. Yeah, I mean, when you deal with banks, it's not always so easy,
Right.
especially integrating with what's already there, right? It's hard to just kind of say, oh, let's scrap everything and start from scratch. Chris, Patrick, Sajil, anyone want to
Yeah,
chime in here?
sure. I mean, maybe, I can add something there. So, I mean, when we used to talk about AI, let's say 5 years back, the first thing that used to come when AI in fintech was the conversational AI. So people were putting a lot of money towards building chatbots and voice recognition in the AI. But I don't think we are, the industry as such is not yet ready to actually go, to that extent where, where we can replace human being, with AI. But what I see is there are certain areas still, the mid-market and other financial institutions can make use of AI. One being personalization of their offerings and understanding the consumer's behavior, financial behavior, when to offer the best product and what is the right time to offer the right product, those type of things. And the other area where I think AI can or is playing a big role is the robot advisory space. So we have seen many matured companies evolving last five to 10 years in the robot advisory space, even though it's not the core use of AI, but in a broader sense, it's considered as AI. And the last but not least, when it comes to marketing and sales, I believe that AI can play a major role in automating upsells, cross-sells, and automating marketing campaigns for the end consumers.
Awesome. Thanks, Sajil. Let's move on to something that I am very passionate about, which is fostering partnerships between banks and fintechs. Patrick and Chris, I'll throw this question to you. How does a fintech company, or I guess, how does a bank look for the right partners in fintech? What are some of the ways that you guys are looking into the market to solve problems within the business?
Yeah, I mean, I can start off. I mean, it's not rocket science. I guess it's kind of a little bit of what we've always done, but find a strong management team who understands their business and understands it well. And if you're selling to banks or working with banks in some capacity, you should probably understand the banking world a little bit. I'd be shocked at some of the conversations I have with folks who just were not prepared for kind of the complexity of it and what all is exactly involved. And we at Atlantic Capital, I mean, there's a lot of social impact and financial wellness. Those are all, certainly big themes right now. And as a bank, we like that. And I think probably all banks do. And folks, these are technologies that are helping consumers, manage their lives better and make an impact to certain groups and demographics that otherwise, have not had that opportunity in the past. I spoke with a company last week and they were focused on, I was expecting to say the underbanked and underserved, and it was kind of a, financial wellness, some educational components, but also investing. And I was expecting to say that was the target market, but he said their focus is on those folks in kind of the 75K to 150K household income range. which, I think that was the first I'd heard of that. But if you think about it, that makes a lot of sense. Those are folks who, on paper, it looks really good, but they might not have the time or inclination or extra dollars to, to figure out how to best put that to use. So I thought that was interesting, but, like I say, it's kind of just old school, diligence and business development, but working with strong teams who have a great idea and who understand, the banking landscape and regulations.
Patrick?
Would agree with many of Chris's points there. I think for us, there's a lot of fintechs out there. And so that kind of gives us a little bit of luxury in saying, we want to find partners, not vendors. And I think, that says a lot about the orientation of the relationship. Vendors are there for a transaction, and we want a partnership. We want a friendship. We want to be able to, if there's a problem, get on a phone call or text someone and say, hey, can you help us out? And I think that's, especially with how frothy the fintech market is, there's a lot of people in it who are just wanting to make a lot of money, and I'm just another number for them, versus someone who approaches it where there's a partnership. I'd also say we're a CDFI, so Community Development Financial Institution is something that U.S. Treasury designates us with. And there are certain fintechs that we want to work with who are very mission-minded. And I think Chris was kind of sharing a story of one that resonates deeply with us. And I think there's actually, it's kind of a tragedy, if you will, or maybe untapped opportunity for really fintechs and CDFIs and mission-minded banks to really work together to think about how do we innovate. So there'd be two things that we look for, Jacob.
Awesome. And kind of the next question on the tail end of that, which is like, as a bank, how are you guys, setting up the process internally to be able to actually work with these fintechs and not just, talk about it, but really kind of bring things to market? What are you guys doing, from an innovation and culture perspective to kind of really tee yourselves up for success there?
For us, it's a lot of education. Some of this touches parts of the bank that might not have had previous experience there. And so it's a little bit of education. And then, in terms of the culture, you just kind of build off of that. But once people kind of get involved, they find out it is fun for the reasons Patrick said, and we've all kind of said. And so, just flexibility and try to encourage folks to think outside the box, overused phrase, but in banking, it's one that's still needed. You've got in banking, depending on the kind of age demographic, you've got folks who, if they came up in the 80s, their training in the 80s, then it's all around credit culture. And so they're very, very conservative. And so when you bring a new product, to them, they look at it as this new, untested thing that's scary. And, at first glance looks to be outside of their kind of risk parameters. So I think the more that they and fintechs as well can, help them think of that as more of a commodity. I mean, that could be a bad word in some ways, but, help some of these banks realize that, this is what you need. This is more of a commodity. This isn't some crazy new profound thing invented by some kids on razor scooters. This is a product that works, and, be more open-minded about it.
Razor scooters, that sounds fun.
Yeah.
Jennifer, I'll ask you, because obviously, you're seeing tons of companies as an investor. Other than things like revenue and customers, what are you looking for in these founders and these companies?
I think the most important thing, and not just as growth stage, kind of growth equity investor, but just overall, is the team that you're backing, right? You're fundamentally backing the CEO and the management team, and that they're going to execute, right, to the next level of growth. And I think that's one of the most important thing. And it's interesting because what's been happening this year in this, pandemic year, right? You are kind of confined to doing everything remote. And I know there's lots of, I think I even saw a question earlier about, travel and whether or not that's going to happen.
Yep.
I firmly believe that certain things like culture building building a certain culture, a mindset of collaboration, all the way to from an investor's perspective, and don't get me wrong, we have, as a firm and specifically within our fintech practice, we've exited successfully 3 companies in the middle of a shutdown, like April, May timeframe, successfully exited. We've, done new deals. I'm doing one right now, knock on wood, completely remote from beginning to the end. And we've adapted throughout this year. But that also means you're doing a little bit more digging. You're doing a little bit more diligence. You're trying to understand a little bit better, getting more comfort, because at the end of the day, that interaction, face-to-face interaction, you can be on Zoom all you'd like, but the whole body language, I think what plenty of studies have shown that 95% of what we communicate is through our body language, not necessarily with our words, right? So how do you capture all that? How do you get to know someone 100% remote? How do you build culture? If you think about companies' mindset, that truly is something that lasts and sticky and all these things. I know there were some talks of productivity going up, but what about that time, such as right now, when things do get burnt out and people are exhausted from staring at the screen? Is that really true still, right? It's such an interesting dynamic that we see play out with all this. And, I guess that's a little bit of a long-winded way of answering your question directly, that it is absolutely the management team, that they'll take forward. And it's just been interesting how to look for that in this year on many different levels. But great companies all around and, doing well, and we're all figuring it out, right?
Absolutely.
I think that's right from Jennifer's perspective, especially as an investor. It is hard. Those things are extremely important, the body language and just the casual having a drink, and you kind of get to know someone and sort of understand their values and
Yep.
their background, and that helps you get more comfortable. And it's hard to do that on a Zoom call because you feel like you're sort of on this finite time talking period. So it's, and even at the bank, it's that hallway chat, a joke turns into an idea, which turns into, a thing, a product, or, a new offering. And so just in fact, last week, we've been remote the whole time, and it's been great. Everything's worked very well. We joke, we did about 4 years worth of PPP loans in 2 weeks. And so we said, if we can do that, then we can pretty much do anything. But at the same time, it's that personal interaction. And so just last week I was, talking to my team, and, most of them are here in Atlanta. And so, I said, let's just meet at a park or something and go walking for an hour, walk and talk, and, try to simulate some of that hallway chatter, which is just good for the brain and good for collaboration.
And also getting some calories off, you know what I mean? I can't sit on my butt all day. I'm just putting that out there.
And there's great lighting outside.
Yes, exactly.
Yeah, that's actually how this picture came to be. I live in New York City, but I got out of the city last week and went hiking up in Cold Springs, New York. And it's, now I can look at this instead of the ugly inside of my apartment every day. So Jill, I will throw it to you as a founder. How has COVID impacted you and your business? Not just, strategically, but also product-wise. Have you made any changes based on the way that, things have changed in the world?
Sure. Yeah. Great. Yeah. Thanks for that question. Yeah. So as a startup, we went through 3 different phases in COVID, and I'm pretty sure most of the startup, founders would have the same opinion as I am talking about. The first phase was, since we used to work with few international banks in Asia, so we knew what is coming, by January, Feb, when US was not much impacted by COVID, but Asia was pretty much shut down, and we knew that something bad is coming in. So that was the phase 1, and we knew how to prepare for the things. But when actually COVID hit, nobody had no clue, how to handle this. So first 3 months was pretty much like, nothing happened. There was no phone call. We had 2 large, pilots running with 2, tier 1 banks in the United States, especially with one of these top 3 banks. And we were working with the small business team within that bank. They were all got busy with PPP. So that was the next phase where, we were all clueless, and we were pretty much shooting in the darkness, not knowing what to do. And the last phase where things were coming back, that's when actually we realized that, products like KapitalWise has a much bigger role to play in the, post-COVID situation, like where banks are looking for more digital digitalization tools to understand their consumers through data. So that has been a smooth space for us. So far, now what we see is banks are either reaching out to us, or when we reach out to banks, they understand that, why product like, data analytics and AI products are important. That's the good part of the COVID. From the product strategy, yeah, we got a lot of time to go back to the drawing board and doing some research on what else we can do. So we are in the middle of working on few of the other additional features on KapitalWise, and also trying out certain other features where we can not just being a technology AI provider, but also providing banks more tools and solutions to bring more customers on board. So there are a few products that we are working on. I can't disclose any of those features right now, but by end of this year, we are planning to roll out a few additional features, which will be more interesting for the traditional and challenger banks to work with us.
Awesome. That's super exciting. One question that I'll pose to both our bankers and our investor on the panel, which is something that's kind of near and dear to my heart. At the Vendor Center, we're connecting founders and customers all day long. And so, when you are, for example, at a conference or going through an accelerator program, how do you look at these companies? Is it always through just that commercial lens or investor lens, or, how can you be sometimes a mentor, or even kind of, sit through a meeting and just learn and take that away as something that's a value add, even if you can't necessarily work with that company? Patrick, I know we actually talked about this a lot in our one-on-one call. Do you want to take that one first?
Sure. I think our position is, we recognize we don't know everything. And so especially as we made this journey, we wanted to try to learn as much as possible. And we're grateful for how many people just talk to us. And so there's a lot of fintechs or companies we see at conferences or whatever that want to talk, and we want to kind of pay it forward. I also think, and it goes to Sajil's point, that many fintechs evolve, they go kind of through different cycles. And so being patient, right? And, maybe today what you're doing isn't necessarily where, it makes sense for us, but hey, let's stay in contact. Like there was a fintech I remember meeting 2 years ago, and it wasn't right. And last year he's a lot closer, and I can't wait for him to call me in February of this year, because I got a feeling we're going to do something with him. And then also the other thing I'd say is, love having partnerships like with you, Jacob, and the Venture Center, being, relying on you to help us endorse or figure out, or the ICBA, who we should, be, meeting and talking to.
Thanks for that.
I would say a lot of the same comments. We've actually been going through a sort of 4-week accelerator program recently here. But, it's looking for that strong management team. The current idea may not, like you said, it may evolve. So if you've got a strong management team, it may not make the most sense for you today, but tomorrow or, next year, 2 years, it could make sense. And for those, just trying to help them. I always sort of joke that, working at a bank for me is just a vehicle for doing what I like to do anyway, which is helping companies grow and make connections, et cetera. Good example of that's a company I spoke with a couple of months ago and was really impressed by the founder. He had a strong and relevant background, but not necessarily startup experience. It felt a little bit outside of our bounds, but I said, I introduced him to someone and he was one of those that didn't fully understand the compliance side of it. Introduced him to someone that could help him on the compliance side. And, she called me back and said, this is fantastic. I love it. I sort of needed her to help get me there from a risk perspective. And then, from there, we connected him to three VC firms. One of them actually invested 2 weeks ago. So that's a pretty good batting average, 1 for 3, at least on those 3 introductions.
Not bad.
And then we got him hooked up with Galileo on the processor side. And so, I would say his speed to market increased by, 3, 4, 5 months just over the course of those couple of weeks through those right introductions. So that's the fun part. As a bank or, an investor, you can help make a meaningful difference to increase their, speed to market and or, odds of success.
Jennifer, you want to touch that one?
Yeah, I mean, at the end of the day, it's it's all people business, right? As an investor. So, in my day job, working with, companies, our companies that we've invested in, our portfolio companies, we try to be as much value add as possible, both at the board level, as well as just day to day. And come in with various different ideas, connections, all the way to different playbooks that we've seen in different scaling models and all these things, to try to be as helpful as possible. But even beyond that, because what you're asking is very specific in terms of this day-to-day interaction, even if it wasn't one of our portfolio companies, right? And it's going back to what Chris is saying, all these relationships that you end up making through, and frankly, it's not one way either. Just because you're doing something doesn't mean you don't get something out of it. I'm learning every single day. There are industry experts everywhere. There are people who know much more about certain things than I do in whatever area. And I get to learn from those people, and whatever value that I can provide, regardless of, what outcome there may be at that given point in time, those all create relationships that eventually, whether or not it happens or not, might actually come out to be a really strong relationship down the line, whether it be resulting in an investment, all the way to just simply something else happening. Doesn't matter, right? We are all dealing with people. It is a people-driven industry. We look for, and Chris was saying too, strong management team is a key to a lot of these things, and that's all people, right? So how do you ignore that completely and make it completely transactional? I think if you approach the industry as a whole that way, it's not really a sustainable way. If it's 100% just transactional and what can I get out of it, I never understand that mentality, frankly. You just not a good way.
I completely agree with you, Jennifer. If somebody asks to meet with me, I feed it in on my calendar, even if it is 2-3 weeks out. You can always learn something, help somebody, and they can help you.
Exactly.
This stuff comes around. So thanks for that. Last, we're going to spend the next 10 or so minutes talking about culture, and guys, continue adding questions in the chat. We'll be sure to get to the most relevant ones. Patrick and Chris, you guys are leaders within your organizations. What kind of culture are you trying to create, and how do you do that with a dispersed workforce? I know, Chris, you touched on that a bit with, something as simple as taking a walk in the park, but, really, what are some of the things that you really are passionate about bringing to your organization?
Like I say, I really, when I came into to Atlantic Capital, we were already a top 50 payments bank by ACH volume. So I stepped into a very strong foundation to build this fintech line of business, and it's been great. We work with, typically growth stage, early stage, but more often we find ourselves working with growth stage companies around the country who may have started out with, some of these more plug and play solutions, which are great when you're just trying to get market traction, et cetera. But eventually you need to sort of break away from that and develop your own direct relationships. So work a lot of growth stage companies who've, whether it's one of a plug and play type solution or whether it's just a smaller bank, they eventually outgrow them for whatever reason, whether it's bank concentration risk or, knowledge, horsepower, et cetera. And so we built a great business. And like I said, now we're trying to filter that down throughout the rest of the bank, right? We're a top 100 SBA lender. So what are more ways we can automate and streamline that process? And just on the commercial lending side, I saw that someone had asked a question about AI and lending. Certain banks are certainly going to understand that. But, as I was referring earlier to some of the smaller community banks that have a certain DNA, that's still a very foreign concept to them, and it's very much relationship-based lending. That's how they think, that's how they were trained, that's how they were taught, and that makes sense a lot of times. But you have to evolve. And even when I started here at the bank, I could see there was resistance to some of those in our other lines of business. But now that between what we've done with the some of the companies we're working with, they see that, and plus everything we've talked about here with COVID. All of a sudden, over the past several months, you're starting to see some of those other folks in the bank start to think more forward, innovation and how can we improve our processes. So for me, it's just really getting everyone to think and act like I think all of us typically do on this call in our day-to-day lives anyway.
Thanks, Chris. Patrick, I'll throw to you. I know the core values of Quantic are something that you're very vocal about. Is this something that you want to touch on?
Yeah, I think at the highest level, the culture is something that we try to be very intentional about. I think, we believe that the competitive advantage you have today as a company is not about being necessarily smarter, but healthier. And that gets to culture as the organization very clear on who it is and where you're going. And one of the ways we've done, work to bring that in is this idea of a common language. And that's really where we tie into our core values. We have a core value of say cheese, for example. And when someone goes to take your picture and says, say cheese, what happens? Both people smile, the person who's getting taken a picture of and usually the photographer. And so how do we weave that into what we do? And for example, one of the ways we've been able to do that even remote is we have something we call positive focus. And when we start meetings off, everyone has to start by saying something positive. It can be personal and professional. And what happens is usually you end up smiling and you're staying connected to your coworker. You're not just going right into the next meeting. So there's an example of just kind of the intentionality, but also how it's morphed as we've, gone remote. Whereas in the past, maybe we'd order cupcakes in for all the staff. We try to think of different ways, but culture is definitely what we see as our competitive advantage and something we're very focused on.
You guys
I can actually jump in there a little bit on that, because I think what Patrick was identifying, which I think is absolutely key, is alignment, right? Going from, it doesn't matter what level of the company you're in, you're all working towards a certain vision. It doesn't matter who you ask within the organization, they'll know exactly what at a high level that you're all working towards and are excited about it. That's what you're describing fundamentally, right? Because yes, it's nice that, various different companies would give free lunches to whatever, right? And that's not really the core of the culture. And that alignment and sense of team and sense of collaboration and being together and you're all working towards the same thing, right? I mean, it's exciting. Everybody's excited, right? That's why cupcakes happen. It's not the other way around, right? And that I think is such key, because really successful startups and really successful companies have that as a DNA, which is why I was lamenting earlier. I mean, 2020, yes, some people were excited about productivity and being able to do remote work, but how do you build that alignment, right? You have to be creative, and is that going to last? Like, it's a real question, right? But anyway.
Sometimes someone asks, sometimes we do vegan cupcakes. Just an question.
There we go.
Thanks, Robbie.
Sometimes we make everyone eat vegan cupcakes even better.
One of the last questions that I want to cover, I know that all of us have to take risks sometimes, especially as an innovation leader within your organization. How do you do that when banks historically are built to mitigate risk, right? Chris, I'll throw that one to you. Talk about taking risks and innovation and, being that you're at a bank, how do you kind of get over that hump sometimes and have to, convince others that the risks are worth taking?
Yeah, I mean, I think, again, it's leveraging your strengths. When I came in, obviously in my past, I've done a lot of, venture lending, pre-revenue type lending. And if you bring that type of opportunity to a traditional credit officer at a bank, their head's going to explode. I know that because I tried it a couple of times. So, after about the second time, I said, why am I going to bang my head against the wall here when, oh, by the way, we're experts at, moving money. So let's completely focus on leveraging that strength. And when you've got that strength and it's proven, you're from a financial business perspective, but also from a compliance and risk perspective, it makes it a lot easier to incrementally build off of that and add capabilities versus, hey, I'm here to do this completely brand new thing, because that, as I said, will scare bankers as quick as anything. And a lot of times for good reasons. I mean, people don't understand. It's hard to be in the shoes of a bank and understand just how much, regulatory compliance there is that affects so many pieces of the bank. People like to joke that banks move slow, and that is true in some regards, but in some regards they kind of have to. It's like starting a marathon with, 20-pound weights around your ankle in some degree. But like I say, just incrementally building off that strength that you have, and showing success and showing, being smart about it. You've got, this is true of any company, a salesperson, more so I see it in banking, but I imagine it's true in other businesses as well. But, you've got, if you're a lender, you've got a credit officer and he's like your gatekeeper. And so people will talk to a company, they'll get a PowerPoint and then they'll toss it over to that credit person and say, what do you think? That's not how it works. You need to come and bring you need to bring why this is a good opportunity. It's like people are just kind of throwing things against the wall to see what sticks. And the decision makers don't like that. And so showing them that you're thinking just like them, as you will. I mean, I always say the most important thing is to think and act like a shareholder. If this is your business, what would you do? And so, that would be kind of the key component, I think, is leveraging the strengths you have and the experts you have, to further your goals.
I would just add something quickly to that. I think there's, innovation doesn't mean reckless, right?
Right.
And so, I think it's easy sometimes to, under the auspices of being reckless, call it innovation, because you really don't want to take the time to figure out what the hell you're doing or what needs to happen. And so, well, this is innovative, so just go with it, right? And so I actually think that's actually very good. That's why I go back to this idea of compliance and innovation should be symbiotic, because it actually forces us to have mature innovation, fully baked innovation. So, I would challenge many bankers that these two things aren't at opposition with each other, and to change your connotations or definition.
Love that. And I have to ask, what's up with the hat?
Hey, we're just trying to be the bank of love, just, share the love, deliver great customer service, make people smile, say cheese. That's one of our core values, as I talked about. So found this and been wearing it every day.
Cool. Speaking of say cheese, before we wrap it up, if everybody would let me take a screenshot and give me a nice big smile. Awesome. All right, guys. I want to thank Sajil. He's the man that really brought all of us together here. I really enjoyed this conversation. If anyone wants to reach out to me or any of the panelists, I think we're all happy to connect on LinkedIn and take conversations from there. And thanks, everybody. And hopefully we'll get another one of these going soon.
Thanks a lot, Jacob. Thanks everyone joining. Yeah, thanks.
Thank you, everyone. Take care.
Bye-bye.